Hello there. Let's dive into swing trading using the Keltner channel indicator. We are focusing on daily chart SPY ETF. Keltner channel by default it has 1.5 standard deviation. This is a 20-day simple moving average. We are going to make it as 200-day 1.5 factor, that's a default one. Average type is simple. True range average is simple. Let's snap it. Now we have this cyan blue line as a 200-day and it has upper channel, lower channel. Anytime price is above the upper channel, it's a bull. So until then we have bull market. This is a neutral zone. Again we have a bull market. Currently we have a bull market going on. We are near the 500, so that's a psychological mark. So we are obviously on the bull market. So this tells us trend. Let's add same settings with 20-day moving average. So by default it has 20-day, 1.5, simple. So let's add that too. Now let's look at the strategy. We know that every time price is above the 200 upper channel, it's a bull. So when the market is bull, we only trade bull trades. There are two ways we can trade bulls. One is when the price goes above the upper channel. Second is when the price goes above the 20 line. So here we had a first bull signal where one day closed above the 20 upper channel. The next day we can buy. In this case, the stop loss is 20-day moving average. So if you buy here, stop loss is on the same day wherever the 20-day moving average. You can also try 2%. That is also works. Since it's a ETF, we are using 2%. If it is an individual stocks, it may be a good idea to look into 3%. So this is the first buy. Here we see second opportunity where price crossed above the 20-day moving average. We can buy here. In this case, our stop loss is recent low. So here we can also subtract 50 cents so that we have a better chance of avoiding the double bottom. Okay, so this is the second signal we got. We have third signal here where crossing above 20-day moving average. Again, we can have a stop loss which is 50 cents below the recent bottom or 50 cents below this channel. Okay, since price is within the channel and above the 200, we don't need to buy here now because we already know that this is a good buy zone. If you missed this buying opportunity, then you can buy one day after the above the channel close. Okay, so this is also another way of buying. In this case, this is the stop loss, the 20-day moving average. So we see that it has a very good bull run. Here we don't see it's crossing below the 20. In that case, we could buy above the channel and then use the 20-day SMA as a stop loss. So when do we sell this? If you're using 2% stop loss, sell at 6%. That is 1:3 risk reward. So that's the one way. In that case, we may need to do several trades. Or you can sell for 8% on the SPY or 10 to 15% on individual stocks. So whichever works for you. In any case, once it comes down and closes below the lower channel, this is no longer bull for us. So overall trend is still bull, but right now it's in the correction mode. So we will wait until price closes above this channel. Here it did not close above this channel, it closed only below, so we cannot buy there. We can see that this is a buy point now. We are above the 200-day Kettler channel. We are above the 20 Kettler channel. This is a buy point. This is a stop loss. Same story repeats. Here we have almost 8% profit here. Again, the next opportunity came in here, and this is aggressive trade. If you want to trade this, I prefer to come to 20 and going back. Okay, let's see how much profit we would have made. If you brought here, sold here, you would have made 8%. If you brought here, we still not sold, but in case we sell here, assuming it corrects in next week, we still made 10%. So this is a very good, easy strategy. It already have ATR and volatility as a part of this. So this is a very good indicator to play swing trade using the daily chart. Okay, it's the same setup. I just changed the colors on these three lines to the same color and also different from these colors so that it will be more clear what we are going to discuss now. Let's go to bearish scenario. You see, this is Tesla daily, and Tesla is swinging a lot nowadays. So this is where the first signal we got, and then we have to buy here. But you see, we are not, this is not above the 200, it's just reached here. And also we see that we are in between the 200 moving average. So it looks like a good opportunity to buy here, but we don't have the proper signal. Even though it's the beginning of the bull, 20 channel is not at fully came up. So here is the another opportunity we have. would have brought, but this trade would have ended negative. Okay, similarly, we have another opportunity here. This trade also might have ended low, negative. So these are the cases where we may lose 2 to 3%. So we just saw two scenarios we lost money. However, once it is down below the 200 channel, the moment it comes back and touches the upper channel or crosses below the 20-day channel, we can short here. So let's look at another bearish example. Okay, let's look at Disney. You see, we entered no trade zone, stayed for a long time, and then we had a real opportunity here. So whenever it comes down below, we can short here, and this could be one of these could be your stop loss. I don't personally trade shorts. I prefer bull trades. But if you're short trader, that's a good opportunity. Again, we had another opportunity here where we can short, and then this is going to be the stop loss. It did not cross, so there is no buyback. Here we see it crossed, so that is the buyback. So you don't need to wait for buyback. Short trades, I prefer short term. So if you have shorted here, you can also take profit here. So in this scenario, see, this is a typical failed trade where we would have lost that money. But Disney also gives a excellent example spotting the turnarounds. Here, 200-day channel, we just crossed here, and also 20-day is above the 200 for past 1 month. That is the first indication it is turning into the bull. This is not where we buy. We don't buy here. We need to see at least 20-day is above the 200 upper channel. Okay, so we have a clear setup here. We're also running into the earnings. Once we have earnings, it will come back sometime into 20 and goes up, or it may come back into neutral chick-chock zone. So this is how you can spot the turnarounds when this 20 is above 200 and also above the upper channel. Then we look for the bull trades. We are looking at daily AMD. In this, we have opportunity to buy here or here, sell here, and then we didn't find any opportunity for more than 3 months. However, earnings are positive. If this turned into bull run, we can buy here. So it crossed above, so it could be here or here. One of these. You have a second opportunity here. You can buy there too. Obviously, this is the stop loss for this buy. So we are running into possible third opportunity. If you're aggressive, you can buy here also. This is going to be stop loss. So whenever this bull runs goes very fast, the stop loss also increases by default based on the Kettler channel. Meta had a very good run this year. So it gave a lot of opportunities to buy So most people worried where to buy when it's running strong, you know. So when we had sell signal, we don't buy here. We wait for a confirmation. We turn to bull and then we buy when it crosses about 20. After earnings, we had a sell signal again. So these 2 months, it's actually going sideways. We might have lost one or two trades. So that is something to be watchful. We are looking at SMH daily ETF. We can see that some of the ETFs and individual stocks are more volatile than SPY. So in this scenario, if you need to be or if you want to hold for longer, you can also use two factor on the 20 channel instead of 1.5. We will still keep the 200 1.5 as it is. Now you can see that this is supposed to be sell point within the channel. We no need to sell, so we can stay longer, yeah, or avoid these kind of errors. Okay, let's recap what we had so far. You can pause the video now and check the whatever we discussed so far. Setup, trend, buying, sell stop, or exiting. That's all for today. Happy trading. Talk to you soon.